Hello guys, hope you're having a wonderful day and let's just jump into it. Today we're going to talk about GME, the stock, also known as GameStop, WallStreetBets, the subreddit, what it is, what's on there and who uses it, and the news media and how they handled and reported on this whole situation with GameStop. And most importantly, we're going to talk about what I think is happening, why it's happening, and what's going to happen in the next couple of days, in the next couple of weeks or so. GME, also known as GameStop, has had a phenomenal couple of days. I mean, the price has been soaring. But why? Why is this happening? Well, there's one reason for that, basically. Now, when it comes to stocks, for most stocks, you could either short them or go long. And when you go long, you basically buy it, and if the stock goes up, you make money. If the stock goes down, you lose money. Shorting a stock is basically the exact opposite of that. So if the stock goes down, you make money. If it goes up, you lose money. And if you're practicing some kind of risk control, at some point you would have to close your positions because you're losing too much money. So you gotta have a stop loss at some point. So what has been going on with GameStop is that GameStop has been shorted for a while now because the stock has been in a downtrend for a long time. And on top of that, GameStop is, I think to this day, the most shorted stock out there. It was shorted over 100%. Now that means that all the shares that were out there, they have been shorted, and they haven't been just shorted, but they've been shorted, some of them multiple times. What that means is if the stock starts going against you, you're gonna have to buy the share that you borrowed from another person that also borrowed that share from somebody else. So there's an exponential factor to that. What that means is basically that if the stock starts going up, a lot of people or a lot of shares would need to be bought to cover the shorts, which in turn would increase the price of the share, which would cause other people to cover their shorts because they are basically at their stop loss limit. So this causes somewhat of a chain reaction or a domino effect. Now, to justify this, a lot of hedge fund managers, they were talking about what a sure deal it is and how confident they are that GameStop is going to go down. And this is part of the problem. I feel like a lot of people were just angry at the fact that hedge fund managers and all this big money were basically dictating where a company is going to go. And the fact that they were shorting the company so heavily shows that they were in a way stunting its growth, and they released many quote-unquote research papers that are supposed to discourage people from going long on GameStop and actually encouraging them to go short with them. And that angered a lot of people. And one of these hedge funds that have been going short on GME is actually Citron. Now Citron is known for coming up with these studies or hit pieces, if you will, that talk about why this stock is overpriced and why it's going to go down. And oftentimes the stock market panics and they sell off, and Citron ends up making a lot of money just by scaring people off. And I think that's what they were expecting to do here as well. But Citron actually this time might have bit off more than they could chew. And the reason I'm saying that is because in theory you should not have more than 100% short. You should not have probably more than 50, because there's really no limit to how high a stock can go. And I think GameStop is a perfect example of that. Nobody in their wildest dreams would have thought that GameStop would go above $50, let alone 100. Now it's at 300, and some people are speculating that by Friday it would be at $500. That's right, GameStop would be at $500 a share. And many people are actually wondering, like, okay, why is this happening? And how is it that hedge fund managers were practicing so little risk management? The 140% short in GME stock is a perfect example of the risks that hedge funds take and took with other people's money. And many people bring up the 2008 stock market crash that happened because the hedge fund managers leveraged themselves, got into a lot of risk, and then when everything came crashing down, they left the main street and the normal people clean up after them. And at the end of this whole thing, the government and the people actually ended up bailing out the banks. They ended up bailing out the huge hedge funds, while the people were left to fend off for themselves. Now, over the course of the last 2 days or so, the media has been running this smear campaign on this subreddit called WallStreetBets, accusing them of purposefully hyping up the stock and manipulating, quote unquote, the market. And you could see an example here on CNN even, that they have made videos like this blaming investors on Reddit for sending the GameStop stock soaring. And they're far from the only ones. CNBC and other news companies have been posting stuff like this all the time. So what is this Reddit, and who on Reddit exactly are they blaming? So basically everybody's blaming WallStreetBets, a pretty large subreddit on Reddit, for hyping up the stock and trying to pump and dump, quote unquote, the stock once enough people have invested in it. And many hedge fund CEOs and chairmen are accusing WallStreetBets of manipulating the market, saying that it's not fair. Some even saying that WallStreetBets is cheating. So what is this subreddit known as WallStreetBets? Well, WallStreetBets is actually a pretty large subreddit, but it wasn't always like this. It's a subreddit that was known where people could come together, talk about some of the options or risky plays they're getting themselves into, and leaving DDs, which means due diligence, talking about why they're investing so heavily into this stock or whatever. And this has been going on for the last couple of years. It's not like it's a new website made for Robin Hooders or for small new retail investors that are stuck at home and got nothing to do. Now, there's many categories on WallStreetBets. There's DDs, there's discussions, there's YOLO, where people basically talking about the risk, people showing off their loss, gains, talking about the news and some other stuff. So this is a pretty big forum with 3.8 million. Now keep in mind, ever since the news media has started talking about WallStreetBets, this basically doubled in the last two days or so. So I know they're trying to discourage people from going to WallStreetBets and blame them for what's going on to the poor hedge fund managers who are losing billions because they didn't practice any risk management. But over the course of the last 2 days, the number of people on this subreddit has basically doubled. And the subreddit was created in 2012. And funny thing is, today the subreddit WallStreetBets was actually taken down for a couple of hours because they had such a massive influx of new users, or as they're known as degenerates, on this subreddit. So who are the people that use this subreddit? Well, most of them are people like you and me. They talk about why they're buying, why they're selling, they share news, they talk about the current political and economic situations. Granted, a lot of them are trolls, or at least the way they talk wouldn't be considered professional, but this is just, the way I would describe it is, if a bunch of friends gathered together and talked about how they carelessly invested their paycheck in some stocks, and they talked about why they did it, or maybe they just talked about why you should do that as well, or why you should pull out from this stock or whatever. So this is a discussion board, and a lot of news media seems to really overshadow this, but Wall Street Bets is basically a discussion place. Nobody's really paying you or forcing you to do anything here. People just come up here and try to tell you what they're doing and why they're doing it. And this situation with Wall Street Bets has gotten so big and all over the place that even people like Congresswoman Alexandria Ocasio-Cortez managed to talk about it on her Twitter, where she talked about the situation, and she says, quote unquote, "Gotta admit, it's really something to see Wall Streeters with a long history of treating our economy as a casino complain about a message board of posters also treating the market as a casino." And I think this kind of summarizes it perfectly, because as we have seen in the past couple of years, I mean decades even, the market goes up, it gets overinflated, hedge fund managers get a little greedy, the bubble pops, people lose a lot of money, the hedge fund managers always survive, a lot of the times they profit, and the circle continues. I mean, it's not like there has been just one case in 2008 where hedge fund managers got too greedy. We could talk about the tech bubble where a lot of people lost a lot of money, and there's of course people that made a lot of money as well, like Mark Cuban. He made a lot of money, whereas some people lost their life savings. So it has been going on for probably over 100 years now. Even people like Elon Musk and a successful, very successful investor, Chamath Palihapitiya, or I'm not sure how to pronounce his name. All I know is he's a successful investor. He has a lot of SPACs coming up, and he went on CNBC television to talk about what he learned from this situation and how he feels about the subreddit Wall Street Bets. And I think this is a rather interesting example of the difference between some of the media who has been paid to smear the retail investors and somebody who actually understands what's going on and is willing and is ready to embrace the change that's happening in the stock market and the way trading stocks is going to go from now on.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wall Street Bets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value, and in my opinion, many of them are doing as good and frankly a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes, their parents lost their jobs, and they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family?
So basically, Kamath kind of summarizes it perfectly what Wall Street Bets is. And while it's easy to point out some of them calling each other autist or themselves autist or retard, it kind of overshadows the fact that many of them do an incredible amount of research in whatever they're posting, and oftentimes they actually are ahead of the hedge fund managers. But simply because they lack capital, they're not able to move the market the same way hedge fund managers would, who can do it quietly in backroom meetings or whatever. So basically, the mainstream media has been talking about how Wall Street Bets is this horrible place that is manipulating stocks and some even suggested that GME, GameStop, should be removed from the trading for 30 days so that people are not able to pump it anymore, which is kind of interesting considering the fact that many of the people that would have to short, that would have to cover their shorts, their due date basically is due in the next couple of days, maybe a week max. So by doing that, that would actually be an olive branch to all these billionaire hedge fund managers that got themselves into this mess. And I think Jim Cramer kind of said it well because I don't know if you know who Cramer is, but he talks about stocks, and a lot of the times he's like, buy this, or sell, sell, sell. So he's a pretty energetic guy. And at least I can appreciate that he's not a hypocrite, because his whole career is telling people what to buy, what to sell. And if you don't think that that in a way is market manipulation, then I don't think there's any market manipulation at all, ever, because this is basically a person with a huge audience telling you what to buy and what to sell. And you are crazy if you think that he is not invested in the stocks he's trying to tell you to buy. And here's what he has to say about this whole situation.
What's manipulation? How about if an analyst came out right now and said, I think GameStop is going to 250? Would we give that person a pass? Yes, because of the First Amendment. Listen to me. It's First Amendment protection versus the idea of a group getting together to bust the shorts. But if the group is not a real group, it's just a lot of people who love it, it's going to be very hard for the U.S. Attorney to do anything, Herb. What is it, the SEC? They're not. What kind of case do they have?
Traded because I don't have subpoena power and I can't really go out and look at it. I can argue. I don't even know if there are foreign powers at work here behind the scenes trying to make chaos of our markets.
So you heard that right. Not only are they accusing people of manipulating the market by buying the stock that they like, they are also hinting and kind of talking about maybe there's a foreign power, like Russia, for example, who not only stole the elections but are now convincing American people to buy GameStop, that in return is causing a lot of billionaires a lot of pain. And I kind of find it funny that nobody's bringing up the fact that Nancy Pelosi and some other people have bought Tesla calls right before Biden signed an order talking about how they are going to try to increase the electric vehicle production, and they're also going to throw a lot of money at electric vehicle manufacturers. At the beginning of last year, some senators or congressmen got into a bit of trouble because they sold a lot of stock after the super secret meeting that talked about coronavirus took place, and many of these people tried to tell the Main Street or the retail investors that there's nothing to worry about when they sold stock behind closed doors after they were informed about the serious problem that coronavirus could be. The news media barely talked about it. And now when normal people work together to make some money or to prop up a stock, maybe they truly believe in it, they all of a sudden should be treated as criminals. I wasn't planning to make a video this long, so I guess I should start finishing up. But before I go, I just want to point out the fact that when you look at the news, there's always somebody trying to sell you something. And for example, the Motley Fool, every day you get these commercials. This stock is like buying Amazon at $3.40 or whatever, or buy these 5 stocks today to make $10,000 from your $1,000 investment or whatever. And even if you Google what stocks to buy, there's going to be hundreds and hundreds of articles from hundreds of different news media telling you, oh, you should invest in this and that. And for some reason, that is not considered market manipulation. But when normal people do it and are actually very successful by doing it, all of a sudden they're talking about making new laws and talking about why we should change why this needs to stop, and why this is not okay. So to finish this video off, I'm gonna tell you what I'm gonna do. I'm gonna continue holding my GME shares, and I am gonna continue visiting WallStreetBets from time to time. I'm not there every day, but I really enjoy the content, and a lot of the times the research they do is just phenomenal. And like I said, oftentimes they're way ahead of Wall Street and way ahead of these billion, sometimes $1 trillion investment firms. And I think you should you should check it out. Don't go blindly buying what they tell you. You should always do your research, but at least they give you better suggestions than what Forbes or Market Watch or whatever it is that pops up every time you open your Google search engine or whatever. I mean, I get them when I watch YouTube videos. I get these commercials when I'm on Facebook. There's always somebody out there that is trying to tell you this is what you should be investing in right now. And for some reason, that's fine. That's okay when they do it. But when normal, everyday people try to tell you something and it actually works, you actually making money from it. I've made a lot of money thanks to WallStreetBets. All of a sudden, that should be illegal and they should just start monitoring it or whatever. I'm really sick of it, and I think this is another example of rules for thee and not for me. And Wall Street has really been doing whatever the hell they feel like for the last couple of decades. I think since Ronald Reagan, they've kind of been given this free reign, and now that people can finally work together through the internet, they're trying to find a way to control you, while for the last couple of decades, nobody has been controlling them. Thank you guys so much for watching. I hope you enjoyed this video. Let me know what you think, how you feel about this whole GameStop situation. I really want to hear your opinions, your questions. I hope you have a wonderful day. Please leave a like, subscribe. That would help the channel a lot. I really appreciate you, and have a wonderful day.